Government has not made any changes in the income tax slabs or tax rates or in standard deduction available from salary or any other deductions available under Chapter 6A, which was really the expectation of the salaried class like every year. However, in line with the government's effort to provide a stable and predictable tax regime, the direct tax proposals in this budget of 2020, they have been made with the objective of simplifying the tax system, promoting voluntary compliance by taxpayers, and reducing litigation. So these are the three really the overarching objectives as announced by the FM today. One of the most anticipated announcement is around cryptocurrency and the related taxation. The budget has proposed to insert a new definition of virtual digital assets, which covers a wide range of digital tokens and notes. As per the proposals, the income from transfer of such assets is proposed to be taxed at 30% without allowing any deduction or expense in computing the taxable income, except, of course, the cost of acquisition. Also, the loss from transfer of such assets cannot be set off against any other income, and it can also not be carried forward to future years. Other changes which have been proposed by the budget, including providing compliance opportunity to genuine taxpayers who could not disclose complete details of income in their tax returns due to various reasons. It could be either because of non-availability of information readily which is available or shortage of time to file belated or tax return. Now, under the proposed provisions, the taxpayers shall be allowed to file an updated tax return if they satisfy certain conditions which have been laid down in the finance bill. Now, with the introduction of annual information system in November of last year, November 2021, the tax authorities now have access to a lot of information regarding different sources of income of taxpayers, which was earlier dependent on the self-declaration by the taxpayers. Because of this information being available with them, the tax authorities can send notices to the taxpayers in case the details of income are reported in the annual information statement, but the taxpayer has not reported the same in his tax return. So in order to reduce litigation for genuine taxpayers, an updated tax return can be filed by voluntarily disclosing the correct details of income which was earlier omitted to be reported. And in terms of the timeline, this updated tax return may be filed for the financial year within 24 months, which is 2 years from the end of the relevant assessment year in a prescribed form. So for an update for financial year, say 2022-23, the updated tax return may be filed by 31st March 2026. Also, apart from the tax, interest, and the fee for delayed filing, the person filing an updated tax return will be required to pay any additional tax which he is supposed to pay on that omitted income, and proof of such payment of tax will have to be accompanied with the updated tax return. One of the big ones is around the COVID relief. The entire country has suffered, or the entire world has suffered because of COVID. Now, the government had released a press release in June 2021 to expressly exclude certain COVID-related payments from the scope of taxation, which was only by way of a press release. Now, the budget has proposed the changes in the legislation to incorporate the benefits granted by that press release. So payments received for COVID-related illness or on death due to COVID now will not be taxable in the hands of the recipient, subject to the proposed provisions. In the hands of the recipient in case of illness, or in case of the family members in case of any family member's death and payment being given to the family. The other positive change introduced in the budget is bringing taxation parity on sale of all long-term capital assets. Now, surcharge on sale of long-term capital asset has now been capped at 15%, which presently can actually go as high as 37%. Earlier, this 15% capping on surcharge was available only on sale of certain assets such as listed equity shares, equity-oriented mutual funds. Now, this amendment will specially benefit the investors of startup ecosystems since the startup companies are not usually listed on stock exchange. The third positive is with respect to NPS contribution, employers' contribution to NPS. Now, deduction is available to state government employees in relation to employers' contribution to NPS. That is proposed to be increased from 10% to 14% of salary, and this has been done to provide parity with the deduction available to central government employees. So there was a lack of parity between state government and central government employees earlier. Then another positive is in section 80DD. So section 80DD provides deduction to the individual or HUF who has incurred any expenditure or deposited any sum in specified scheme for the benefit of a dependent, being a person with disability. Now, currently such deduction is available where the scheme provides for payment of annuity or lump sum for the benefit of the dependent on the death of the parent and guardian only, not before that. Now, the budget proposes to extend the deduction to schemes that provide for payment of annuity or lump sum to the dependent when the parent or guardian attains 60 years of age or more, and where the payments or deposits to such scheme has been discontinued. Tax authorities conduct search or survey proceedings on certain taxpayers to ascertain the correct reporting of income or losses by the taxpayers vis-a-vis information which is available with the income tax authorities. Now, earlier the taxpayers were able to set off losses against any undisclosed income which was found during such survey or search proceedings. Now, with the intent to discourage incorrect disclosure of income by the taxpayers in the first place and also to plug the revenue leakage, the budget has proposed to disallow adjusting the losses against undisclosed income found by the tax authority. So this would be a deterrent for any taxpayer in not disclosing the deterrent to disclose incorrect information basically.